Hi, in this final recording, we're going to talk about the checks and balances you can do just to make sure you're going in the right direction with your own bookkeeping. Hopefully you've gone through all of the other videos. You found them fairly useful in terms of giving you a bit of an overview of how to approach your own bookkeeping. There's always going to be some quirks and some things that are particular for your own business needs. So we've tried to cover most of the general basis we can, but if you've got any question, by all means, contact us if you are one of our clients. So the checks and balances you need to do could potentially save you a lot of time later on, because you don't want to get to the end of the year and find there's certain things that went wrong that maybe happened in month 3 and you've now got to month 12. So it's quite important to have some form of checklist and to check it on a fairly consistent basis, just to make sure you're on top of it, really. And the more you keep on top of it, the easier it gets. Okay. So the single most important check you can do, if you've done nothing else whatsoever, is so fundamental. Sometimes we've had potential clients or clients do their own bookkeeping, and this doesn't get done, and it causes quite a lot of additional work at the end of the year, and a lot of duplication, because we need to sometimes go through everything that you've gone through yourself to find where the discrepancies are. So the single most important thing you can do is basically do a check to check that the bank balance on your software, this is zero or otherwise, is the same as the bank balance in your bank account. If you're allocating all of these transactions, money coming in and out, sales invoices, purchase invoices, but you're finding, but you check the bank balance in your software, your books against the statement, and it's adrift. And sometimes it can be £100 adrift, but actually underneath the surface there can be quite a lot going on in terms of missing transactions. Then it can be a bit of a needle in a haystack to find where it went wrong, particularly if you haven't done this check for a period of time. So if you're getting to the end of the first year and you've never actually checked your bank statement against the software, you don't know where to start if you've got difference. So the only place you can start is from the beginning. So how do you check your software against your statement? So this is what you would typically need to do. So we're in the demo company again here. So in this instance, I mentioned in the previous recording that we've got a balance in zero and we've got a statement balance. So when I say there's a difference, it's not actually those two figures we're talking about with the difference, because the reason for these two being different should be these outstanding transactions here. If you've reconciled all these transactions and this is still different, but then potentially there is an issue. But the way to know 100% for sure is if you click on these little 3 sort of icons here, click on Reconciliation Report. And I would typically suggest someone does a bank reconciliation at least once a month. So what you do is pick the end of the month you're reconciling. So you'd always do the most recent completed month. So I'm doing this on the 6th of August. So if we were checking July, you would run it up to the 31st of July. And you're not always going to be, unless you've got lots of spare time, we've got a dedicated bookkeeper, you're not always going to have 0 transactions to reconcile. So you'll often find you've got a section here that says unreconciled bank statement lines. So what that's saying is this is the balance we've got in zero that you've actually allocated in zero. However, you've got quite a lot of transactions sitting, waiting to be allocated. If you were to allocate them, this is the balance we'd have in zero. And this balance here should be your statement balance. So if you've got no unreconciled transactions and no outstanding transactions, then this balance in zero at the top here, this balance per the statement will be exactly the same figure. Okay, so that's one thing to note. But the key thing is, even though that says that's the statement balance, that's the statement balance that zero believes is the statement balance. So what you need to do is check this balance here against the physical bank statement. So it doesn't really matter if you've got these unreconciled transactions, that's not too much of a problem. It's the main concern is to make sure that this statement balance here agrees to your bank statement. So that's the simplest check you can do. If it doesn't agree, then you need to have a way of approaching that difference and how to tackle that problem. That there is a structured way to break it down and sort of a narrow, process elimination where that difference is. We're not going to go in this particular video, but just want to highlight the importance of checking your bank balance. But typically, the main differences will be could be in your opening balance. So if you've transferred from a new system, or if the bank was going for 3 months before you started using Xero, you need to make sure your opening balance is in the right starting position. Because if it's not, you're starting from the wrong foot straight away. As I've mentioned at the bottom, if it doesn't balance, it creates a lot of work, because if somebody was to pass us over their books, or send us their Xero invite, or invite us to log in at the end of the year to complete the statutory accounts and your corporation tax and do all the year-end work, one of the first things we check is your bank balance. And if there is a difference, we literally do not know where to start. And we spend a certain amount of time as part of our general checks, but if we can't find where that difference is, we've literally got to go and potentially recreate it from the start. So it's a really, really important check to make. I mentioned later on, we're in the process of giving you a checklist just to remind you what the key areas are to check. If you do get yourself in a bit of difficulty because it doesn't agree and you don't know where that difference is, watch the video that we're about to release shortly, showing you how to tackle a problem with your bank account. And if you've still got issues, and by all means, it's something we can look at for you. We do our own bookkeeping, we do bookkeeping for clients. So, we're happy to get involved. Just let us know, when was the last time you reconciled it, if you have ever reconciled it, and we know where to sort of start from, where our starting basis is. Okay, so that's definitely the most important one. If you've done nothing else but reconcile your bank, that's quite fundamental. So you get a big tick from us if you're able to get a reconciled bank account. Beyond that, if you're doing invoice basis of bookkeeping, so you're raising sales invoices, you're entering purchase invoices, you need to maintain your sales ledger and your purchase ledger. So it's one thing entering all these sales, but it's another thing making sure that they're kept up to date, they're tidied up, that they're clean. So what sort of checks do we mean when we say make sure that your sales are tidy and your purchases are tidy? Essentially, you can run a report on Xero, which we'll have a look at in a moment, and it shows you a list. You might remember from previous recordings, there's a list, and it's called aged debtors. That will show you exactly what invoices are overdue and by what customer. If you run that report at specific dates and you're happy, that reflects what the business is generally owed from those customers, and you haven't got a problem. If, however, it's nowhere near the right ballpark, so let's say, for example, you're happy you're not owed any money, you're happy that all your sales have been paid, all of them were paid as at the end of your financial year. So let's say your financial year ended 31st of May, you're happy, all your customers paid up in time. However, if we run an aged debtors report and it said you were owed £8,000 and you said you weren't, it's a bit similar to the bank account. We need to try and find out what's happened, how they've not been paid. Has there been a duplication? So it is another fundamental area. So the bank is definitely the most important, but beyond that, making sure your sales and your purchases is really important as well. So if we dive into Xero, so we go to reports, we go to aged receivables. You might recall this from previous recording. So this is the report. This is a really key report for accountants because it's part of our checks and balances. So if you can do it in the year, you'll know you're basically in the right track with the integrity of the data and the quality of your bookkeeping. So what you do, run a report to the nearest month. If your year end was May, we'd run the year end to May. So let's go to May 18. So what we're expecting is the balance elsewhere in your accounts, and it's called the trial balance if we're getting technical sort of in accounting bookkeeping terms. We want your aged receivables balance to be the same figure it is on this report, so it's 116995. And it also needs to be accurate. So it says you're owed £850. We want that to be corrected. If you as the client turns around and says we're not owed that money, then we basically need to figure out how we can identify what went wrong. Typically, differences can be duplicated invoices, or it can be where you've gone onto an invoice. Sometimes it might be not enough money showing, and it can also influence the bank account. So another typical area where there can be a discrepancy is if you click on the invoice itself, it's where you might recall in the previous recording, I mentioned it's better to match your sales receipts from your bank account, not from this screen. So if somebody were to go to the bottom of an invoice on Xero and say, this has been paid, it's been paid into this account, this is how it was paid, and it turned out it wasn't actually paid, that causes a discrepancy with the bank and also a discrepancy with the aged debtors report. So that's typically one area, and also duplications. So if you just review your aged receivables, just check your sales. Another way of checking it is accounts and sales. Just checking this, look what's overdue, just a bit of hygiene really, a bit of a health check, just make sure this all looks right. If you keep on top as you go along, it's hard to go too far wrong. And just another small reminder again, this is all for invoice bookkeeping. If you do cash book form of bookkeeping, so you're not using your sales ledger, you're not using your purchase ledger, you're doing it all directly from your bank, then this is one less thing you need to worry about. There's still some considerations we have when we prepare your accounts, but from your bookkeeping perspective, you don't need to sort of look at this section in terms of the checks and balances. Okay, so I've pretty much brushed over purchases here because it's the same as the sales, exactly the same process. So go into aged payables, check who you owe money to, just make sure it looks correct. Do I really owe this person that money? Or typically we find with purchases is where you've entered an invoice, but it wasn't paid from the bank account, it was actually paid personally. So on a separate video, we'll show you how to account for expenses and things, out of pocket type purchases. But that tends to be a standard area, but it's the same principle. Run a report on a regular basis, make sure it looks accurate, really. Okay, so they're the three main checks and balances. You've got your bank account, you've got to check your sales, check your purchases. If you are a VAT registered business and you also have staff, then you can see from this screen there's some checks you can do around your PAYE account, around your VAT account. If you've got loans, there's certain things you can do to make sure your loans are being allocated properly. Same with hire purchases, same principle as loans. Bank transfers between accounts can cause discrepancies, so that's why it's important to check your statement balance to make sure you've accounted for those transfers correctly. Fixed assets has its own rules in terms of depreciation, what your depreciation policy is, how you depreciate, what do you do with additions in the first year, what do you do with disposals, how do you account for stock on a rolling basis, how do you account for WIP is work in progress, so any work that you performed but you haven't raised an invoice, that's work in progress. So all of these things, the reason we put them into other and not as part of the three main checks and balances is unless you're a bookkeeper by training, by qualification, or you've got a lot of experience in terms of running your own business in these areas, it's not the thing we typically would expect you to have to do, because we do go over all these key areas, including the first three, ourselves, when we prepare your accounts. So I would say month to month, quarter to quarter, these areas are not as important. The VAT, possibly if you're a VAT registered business, but we will do some separate recordings on VAT because it's its own sort of area, really. So in terms of what you can do to make our lives easier, to make sure your life is easier ultimately by keeping on top of it, is keep on top of your bank account, check your purchases, check your sales, and that makes quite a big difference, really. Okay, so that is the end of our basics of bookkeeping. We do have a few other key areas we're introducing in terms of the content. So we've not been too specific in terms of this is suited for a limited company, this is suited for sole trader. So virtually everything we're talking about, invoice bookkeeping, cash book bookkeeping, checking your bank account, it is relevant for limited companies and unincorporated businesses, so sole traders. I would say it's definitely more suited to limited companies because they need a more formal bookkeeping system. So what we're going to do in the coming weeks is introduce some more specific content for limited company business owners and bookkeepers, and also for non-incorporated businesses. So some of the areas we're going to touch upon, which are relevant for everyone, is what can I claim? It's literally one of the most common expenses we come across. So we're going to do some recordings explaining the common things you can claim and the choices you have in making claims. We're also going to do some specific content for limited companies. So we're limited companies, you need to think about salaries, you need to think about dividends, you need to think about expenses. And we're going to also do some specific content for sole traders and partnerships, because equally there are some things that you don't need to do for sole traders that you would need to do for limited companies. So it'd be good for anyone who's not a limited company to know how you can possibly make your life as easy as possible. And there are a few corners we can cut, if I'm honest, if you're not a limited company. So we're producing some specific content just to show how your bookkeeping as a sole trader can be made a little bit easier. So hopefully you found this enjoyable. This isn't a static resource. This is a live resource. We're constantly adding new content. This is literally just our sort of introduction to bookkeeping series. We're introducing a lot more content. We've got some sort of business coaching content that is suitable for new businesses or growing businesses. So hopefully you found it useful. Any questions, feel free to get in touch. Thanks.